On the sofa in the FT's London headquarters by Noel Quinn, Chief Executive of HSBC. Welcome, Noel.
Thank you, Stephen. Thank you for having
morning.
me. Morning.
Now, Mr. Quinn has been Chief Executive how long now of HSBC?
Well, 2.5 years from the start and probably just under 2 years from permanent appointment.
Yeah, and you joined HSBC in 1987.
I did.
Or a subsidiary of Midland Bank,
Yep.
a year after I was born, I believe.
Thank you for saying that. That makes me feel really, really good.
And you've taken over HSBC in a particularly interesting time for the bank. Only a month after you were named permanent chief executive in March last year,
Yep.
The coronavirus struck, and we're still trying to come out of this pandemic now. And you've also been running the bank during one of the most difficult periods of geopolitical tensions between the UK, the US, and China. So I'd like to kick off by asking you first about the pandemic and
Sure.
the global recovery, and also touching on your thoughts on the new variant which is emerging, and there are still a lot of unknowns about that. So how has this been impacting the global banking industry and HSBC itself?
Well, clearly I like a challenge, having taken over in March of 2019. The pandemic, we can look at it two ways. It's clearly a major shock and a major concern for the peoples of the world, but also the economics of the world. But you should also look at the positives. There's been some scientific discoveries, and the vaccine program has gone far faster in creating a vaccine than probably we thought when the pandemic first broke out. We were talking about it maybe taking 2 to 3 years. The vaccines came onto the market within a year. So that's a tremendous success. And hopefully that learning on scientific innovation will carry through to other areas of medicine. Also, the governments of the world and the regulators, plus the banking sector, did well at supporting their customers through what was economic turmoil.
Yeah.
And the support programs have worked. The unemployment levels are lower in the market globally than we thought they would be. The GDP has recovered faster. Businesses have survived where previously they would have failed in an economic crisis. So we should look at that as a positive as well. In terms of the latest variant, I'm hopeful that the vaccines will still act as a level of defense against that new variant. But I'm not a scientist. We'll have to wait and see what emerges. I think the financial sector is well positioned. The balance sheets are strong. Customers are well positioned. There's a lot of liquidity in their balance sheets as well. And I'm hopeful, I'm optimistic, but we'll have to wait for another couple of weeks before we know how it will transpire.
And just one of the things that we've been picking up, obviously when you hit a real world stress test, as COVID has been, it often focuses the mind and forces executives and institutions to make tough decisions that, perhaps in calmer waters, they delayed or didn't make. Do you think that's been the case with the financial industry? I mean, we certainly have seen a lot of cost-cutting moves, branch closures, decisions about the perimeters of certain institutions. In a way, will COVID kind of be remembered as a period of tough but necessary decisions for banking?
I think some of those decisions have been taken that were probably going to be taken anyway, because the profitability of the sector needed to be supported. I don't think, if you look at profitability of banking in Europe, generally continental Europe, it's not hugely profitable. There is profitability of banking in the US. Asia is a profitable banking market. The UK is a profitable banking market. But there were pressures pre-COVID on profitability in certain parts of the banking sector. I think what I'd like us to be remembered for in COVID actually is not the cost cutting, but the support the banking sector offered to its customers. I remember in one 8-week period, just as COVID broke, we advanced an additional $41 billion of lending to corporate customers globally in that 8-week period, at the same time as our colleagues were working from home and worrying and caring for their families. Now, that's a huge amount of drawdown of additional funding. I'd like to think the banking sector will be remembered for the support it provided to customers rather than the cost cutting it's had to do in response to the economic slowdown.
Yeah, well, certainly a big difference in sort of social optics and utility compared with 2007 and 2008, where banks were very much responsible and the enemy. This has been a chance, I think, to reassert some of that social value.
And there's been some good collaboration with governments and regulators. I think everyone's played their part, and it's worked. We still have a long recovery to go. I think there's been good economic recovery this year. I'm confident it will continue so long as the current variant of COVID doesn't really derail the vaccines. And I think we should look forward with optimism.
Yeah. So obviously one of the most interesting topics in global economics and finance at the moment is inflation.
Yeah.
People are very divided on whether it's transitory, whether it's permanent, and the correct policy response between raising rates to damp down inflation and not, creating unsustainable repayment obligations for what is a very heavily indebted sovereign system around the world. I mean, what is your current view on inflation and the global interest rate outlook? Because I don't think there are very many interest rates around the world that HSBC isn't affected by in some way.
Listen, there are many wiser people than me that can preach on economics, but so as a banker, I'll give you my view on what I see. I believe the answer on inflation, it's both transitory and it's permanent, or more medium term. I think there are some temporary elements, which is going from fast rewind on the economy to fast forward that has stressed the supply chain, and that's creating inflation pressures. But I think there are some other things at play as well. I do think the resilience issues that COVID displayed for certain companies and governments, and the geopolitics is also changing supply chains at the same time. So you've got a recovery in supply chains and some shifting of supply chains in response to geopolitics and in response to resilience matters. Plus, you've got a much higher oil price at the moment. And given the sustainability agenda, I'm not convinced there's going to be a big increase in the supply of oil onto the market over the near term, but the demand won't decline. So there are going to be some oil price pressures, I think, over the near term. Plus, you've got a fractured labor market. COVID has taken the labor market back more to its home territories, and therefore there is a pressure on the supply chains that I don't think, even with success on the vaccines, is going to be removed purely in the next 6 to 12 months. I think it's going to take time for that to rebalance. Final point, there is a cost of the investment program that needs to be undertaken to achieve the net zero ambitions. And that investment program is extensive, and it will be heavily loaded in the next 10 years. And I think that cost will weave its way in to inflation one way or the other. Let's be clear, the cost of hydrogen in the first 5 to 10 years is unlikely to be equivalent to the cost of oil and gas today. So there's a premium there on the offtake agreements that the world has to pay for. It took 25 years for the cost curve of wind and solar to become equivalent to the cost curve of oil and gas. We can't afford for that to happen with the new technologies of the world.
And the interest rate outlook, I mean, obviously HSBC is one of the largest deposit take. I mean, what's your total deposits?
So listen, again, my personal view on interest rates, it's a balancing act. And it's going to be part art and part science. If the economic recovery and inflation continues at pace and there isn't an adjustment to interest rates, there is a risk of destabilizing the financial markets and the confidence in the financial markets. If, on the other hand, interest rates rise too fast to control inflation, there's a risk of destabilizing economic growth. And therefore, I do think the policymakers will probably find a fine balance that balances confidence in the financial markets and confidence in the real markets. And therefore, it will be a progressive curve, gentle curve, to allow that balance to happen in an orderly manner. When do we think that those first moves will take place? Our view is the first moves will take place next year, and it will be a slow, steady curve, and should be a slow, steady curve.
And even small increases for a bank of HSBC's size with its balance sheet would have, a large impact on your earnings, obviously increasing as this curve steepens.
We're a significantly cash surplus organization. We have a balance sheet of around about 1.7 trillion of customer deposits and about 1.1 trillion of customer lending. So we have a significant cash surplus that at the moment is not earning a huge premium. It's not earning hardly anything. So higher interest rates will turn that into positive territory. And that would be a meaningful impact on the bank.
And of course, if the Fed rises, that has an impact on HIBOR, which is obviously your largest market. So are you anticipating next year much more positive earnings news then?
Well, I think my focus is on driving underlying earnings growth irrespective of interest rates. And that should be the management team's primary focus. And we're doing that. I was pleased with the first 9 months of this year. We grew our fee income by over 15%. Our trade working capital balances grew by 17%. We're growing our wealth balances double digit. So we're trying to drive underlying growth in the business in a low interest rate environment. And that's our path to 10% ROTE in the medium term. That's our route. If interest rates come in and provide additional earnings, I view that as icing on top. But I want to get there via underlying real growth in the fundamentals of the business.
Yeah. Now, I'll come back to HSBC strategy a bit later on, but I want to just talk about geopolitics. I mean, one of the overriding challenges that any global bank faces at the moment, but in particular HSBC because of its historic footprint, headquarters and home, not headquarters, home market of Hong Kong, obviously largely a US dollar operating bank, headquarters in London. And, I think it's fair to say a particularly acute, especially under Donald Trump, period of US-Chinese tensions, in particular, as we said, over Hong Kong. Are you still confident it's possible to be a truly global bank with HSBC's footprint in the age of these rising tensions, assuming they maintain at the same level or even increase? And is this having a tangible impact and strain on the firm?
I am absolutely confident there is a place for HSBC in an international bank, even in today's more challenged geopolitical world. I draw comfort on that from my clients, actually. If I look even last year, in the middle of COVID, our corporate banking clients were still asking us to help them trade and operate across border in other markets. And that request for help overseas in opening bank accounts for them, providing them with banking services in our middle market corporate business was up 15% last year. Now, one would not naturally think that would be the case in the middle of an economic crisis and a COVID crisis. But that was the fact. Our clients are still asking us to help them with international wealth management, with international corporate banking. They want us to help them with international retail banking. So I draw comfort from that. Now, I'm also draw comfort from the fact that in 156 years of HSBC's history, there have been times in the world that have been challenging, and particularly geopolitically challenging. And we have a strong strategy, a strong proposition. Our customers believe in it. And I believe we should look forward over the long term and not adjust the strategy purely on potentially short to medium term issues. And we've survived difficult geopolitical challenges in the past, and we will do so again.
And you're confident that you can navigate often directly contradictory sanctions and counter sanctions rules.
Listen,
different.
No one's going to pretend international banking's easy. It's complex, and I'm not going to pretend it's easy. Yes, you have to comply with at times conflicting laws, at times competing sanctions policies. But you have to do that. You have to do it with objectivity, without politics, without taking sides. You're an international bank operating in 60 countries, and you have to comply with the laws. And at times it's complex. But who said international banking was easy?
Well, HSBC is still here, after a century and a half. Hong Kong. You yourself, probably would have liked to spend a lot more time in the city than you have been able to lately. Last time I think you spent 2 weeks in quarantine in late 2019. Your chairman, Mark Tucker, spent even longer in quarantine.
3 weeks.
3 weeks. Are you optimistic about the future of the city, both in the context of the changes in rules, the national security law, but also, I think it's fair to say, a draconian policy towards COVID? I mean, do you think Hong Kong still has that same luster as Asia's top financial center? Are you worried about it?
I'm very confident on the future of Hong Kong. I have no doubt whatsoever it has a bright future. It's going through challenging times and has done over the past 2 or 3 years. And HSBC exists today because of Hong Kong. Hong Kong has been very good to HSBC, and we'll do everything we can to support Hong Kong through the COVID period, pre-COVID and post-COVID. Would I love to get back there? Of course I would. Would I love to spend more time? Would I love the border of Hong Kong to be open? Of course I would. But that's not my position. Each government of the world has to form their own policy on how they deal with COVID. That's not my role to inform governments. Hong Kong will reopen at some stage, and it will be back to being a vibrant international business community. What I would draw your attention to is the reality of the capital markets in Hong Kong today. If you think about the average daily turnover going through the Hong Kong Stock Exchange in 2020, it was up around about 49%. First 9 months of this year, it's up 45%, I think 43, 45%.
Yeah.
So it's still vibrant. There's still a lot of volume going through the Hong Kong market. If you think about the IPOs that were conducted last year in Hong Kong, 90% of them were for mainland Chinese companies. If you think about the FDI going into and out of China,
Yeah.
I think 70% of the FDI going into China from the rest of the world routes through Hong Kong.
Yeah.
60% of the FDI going from China to the rest of the world routes through Hong Kong.
Yeah.
Hong Kong is still a very, very vibrant international capital market and is an important gateway to China. And I want to make sure HSBC plays a very strong role in today and its future.
Yeah, I mean, I've often heard the quip from HSBC executives that HSBC is the most international bank in China, but also the most international Chinese bank. And whilst that may be difficult, it kind of is your unique advantage that you have.
Well, I'd put it broader than that. I think we're an international bank first and foremost.
Yeah,
we're particularly a global wholesale bank. We're a bank that has a strong sort of heritage and center of gravity in Asia, the Middle East, and the UK. And what I'd like to think we are is a bank that's well able to bridge East and West and to help businesses. And the uniqueness of HSBC, we can help the very largest global corporates, but we can also offer that international proposition to the 50 million turnover company, the 100 million, the 500.
Yeah.
And we can do that in 60 countries around the world. We go deeper into the business community than most of my global peers. We go wider in international geography than any of our domestic peers. That is our uniqueness, helping entrepreneurial mid-market corporates navigate the complexity of the world.
Yeah. No, it's one of the last banks that still can say we operate in 60 countries worldwide. I just want to bring in an audience question. We get this one on almost every session, but it is very important. Tensions over Brexit are still running high. We still have a largely unresolved financial services relationship, between the EU and the UK. How do you see the balance between London and continental cities, developing over time? And do you think you will have to move more assets, staff, or business lines over the next
We're fully
years?
positioned for whatever the future arrangement is after the temporary arrangements move on. I'm hopeful the temporary arrangements will become more permanent. I think there's some optimism on that, but we'll have to wait and see. Again, that's not for me to make a judgment call on. That's for politicians and regulators to make a call on. But either way, we're positioned. We have the required capabilities in continental Europe and in the UK. So whatever the outcome, we have the resources in place. I don't need to move more resources from where they are now to where they need to be. We're confident we can cope with the volumes wherever those volumes emerge.
But are you worried that fragmentation of financial centres, and perhaps duplication of roles will have a knock-on impact on clients and increase costs and increase time?
There is the risk of fragmentation increasing costs. That is a reality, but that is something outside of my control. That is a decision for the regulators to make and for the politicians to make. But there is a risk of fragmentation leading to higher costs for corporates.
Yeah. Now, we've only got a couple of minutes left, so I just want to talk a little bit about HSBC strategy and performance, how you're doing on the turnaround that you and your chairman, Mark Tucker, have been overseeing. Most recently, you've shrunk the perimeter of the bank, selling your US retail and your French retail business. Tough decisions, I'm sure. But HSBC shares are still down around 30% since the start of 2020, which has wiped around 47 billion from its value. So I'm just wondering if you can talk a little bit about why you think that's occurred and what will be the catalysts, hopefully, for reversing this.
Well, I think one of the big factors is you're still coming out of an economic downturn, a material one, and it particularly impacted us because the lower interest rates with such high liquidity took out in excess of over $6 billion of revenue. So the share price has taken a hit because the revenue has declined. Now, I've got to reboot that revenue through other sources. And I've got to prove the ability of the organization quarter on quarter to show continued underlying revenue growth. And then eventually, there'll be an added benefit of interest rates coming in on top of that. So I expect that the market, if they see evidence of good revenue growth, organic revenue growth, they'll progressively give us credit for that. I think we've also got to acknowledge the fact that underlying economic growth is still challenged. And therefore, there's a suppression in the share price because of that.
Yeah.
But I also believe we've made good progress on evidencing our transformation. We set ourselves a target of 110 billion of RWA savings in 3 years. At the Q3 mark of this year, I think we told the market that we were at circa 90 billion of savings already achieved.
Yeah.
So that's, in just over 1.5 years, we've done the vast majority of that target. That's great progress.
Yeah.
We've made good progress on costs. We have more to do. We have to drive revenue growth. I think as geopolitics start to stabilize, I hope they will stabilize, then that should benefit. But we've really got to drive revenue growth.
Yeah, that's what it comes down to. I mean, I often look at your job and think, how do you keep all of these different facets of the bank in one place? I could talk to you for another half an hour, but I think we have about a minute left. So I'm going to bring in a final audience question. And if you could be brief on this. They want Noel to comment on the future of central bank digital currencies.
I'm a big supporter of it, and that's where I think we should put our energy. So we are going all in on central bank digital currencies. I believe we need to be a connector between different forms of CBDC.
Yeah.
I don't think there'll be one version of CBDC, and I think, and therefore interoperability is going to be important. And as a global bank, we should provide that global interoperability for CBDCs.
Yeah. And when you're talking to the regulators and central banks looking at this, what is your sense of how far away we are from this?
I think you've got to go back to the potential use cases. I think there's a strong use case for CBDCs for cross-border movement of money.
Exactly.
And I think that's the strongest use case, and that's where we put in our energies to help different central banks move money for retail customers and corporate customers, particularly SMEs and mid-market corporates, to be able to move money more effectively and efficiently cross-border. CBDCs has a great role in that.
Yeah. And do you think we'll see one of those in the next, really start being actually used at scale,
I do.
Cheap scale in the next couple of years?
Yeah, I do. I think different markets are moving at different paces, but I do think you'll certainly see some test cases come into the market in the next couple of years, and then you'll see it progressively scale up.
Yeah. Now, there is also threats from technology and digitization from banking. We've heard a lot about it at this conference, both from a huge and very fast-growing shadow banking sector, which isn't subject to the same regulations and scrutiny. You've got fintechs coming in, and then you also have tentative encroachments from big technology companies, specifically in the area of payments. So, what is your take on these new challenges, as if you weren't facing enough of them already? And do you think more regulation is going to be imminent in order to level the playing field between banks and their new competitors?
Listen, I think competition's an inevitability of any industry, and particularly banking, and competition comes in many forms, and fintechs and big techs are one of those. And I'm not complacent. We stay close to them, we observe them, and also, frankly, we learn from them. There is capabilities they're building. There are capabilities they're building, technologies they're using. I can use them in our business, and we are now using them. So you both watch them and learn from them. Do I think there's an element of regulation needed in certain parts? Yeah, I do. I think particularly when you start to get fin and big techs getting scale in the acquisition of customer deposits, then there needs to be an eye to the conduct agenda on that, the way there is for the regulated institution. When they're starting to get heavily into the lending market, there needs to be an eye to conduct on that. So I think there is a place for regulation to make sure that there aren't dual standards there for similar offers to clients. But again, that's for regulators to form an opinion on. I do worry about some use cases of technology at the moment particularly around cryptos, where one could argue there is a build-up of potential conduct issues that are emerging in that sector.
And what's your attitude as a HSBC to the trading, custody, interactions with crypto?
Where I'm all in on CBDC, we're not in on crypto. I do worry at the moment, even as a trader or for even professional investors. It's not an asset class at the moment that we're active on in any form, and don't intend to be in the near term. I worry about that as an asset class, because I don't see crypto very often as a payment currency. I'm seeing it more as an asset class. And as an asset class, you have to be confident that the buyers of that asset class are doing so wisely and with knowledge, and that there isn't a problem around the corner. And I do worry on that.
It's now a $3 trillion asset class. This is not and that's been created in just a few years, and the vast majority of it in the last couple of years. Not quite systemic maybe yet, but certainly on the way to it. I mean, there is going to necessarily be some interaction with the traditional financial system before too long.
And for those that are holding that asset class, I think there is the potential for regulation in some form to come. You could look at some countries and they said, actually, we're not allowing crypto in the market.
Mm-hmm.
There are other markets that are thinking about some form of regulation. At the moment, I don't think that is, one could argue, priced in to the valuation of some of that asset class, and therefore there is the potential for correction, but only time will tell. That's not my call.
So, looking back on your 2.5, 3 years in charge now, what lessons have you taken from running this incredibly large, complex institution? Are there any decisions you've taken that you'd like to take back?
Well, firstly, it's a huge privilege, and I'm not saying that lightly. I mean, I started in HSBC nearly 34 years ago, 34 years on the 2nd of Jan next year. I would never have expected to be in this job. So it's a huge privilege. It's a huge responsibility, particularly going through so many challenges, COVID, economic, and geopolitics. But I've enjoyed it. Despite all of those challenges, I've enjoyed it. I love the people I work with. I believe firmly in the role of HSBC. I believe we try to do good to help people navigate a complex world. And I've enjoyed the last 2.5 years in leading this great organization. And I just want to go on and keep trying to make it a better organization.
Okay, well, that's all we have time for this morning. So thank you very much, Noel. Hope to see more of you in our future events. And to our audience, please stay tuned. We have an interview with the CEO of UBS, Ralph Hamers, coming up with our European banking correspondent, Owen Walker. Thank you.